QuickBooks Online 2025 Reports Overview. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We're going to go ahead and choose the United States version of the software, verify that we're not a robot, and continue closing that prior tab as it is no longer needed. We're now in the sample company file for Craig's Design and Landscaping Services, opening the major financial statement reports the way we do it every time. The reports are on the left-hand side. In the Standard tab, under the Favorites, right-clicking on that balance sheet to open the link in a new tab. Right-clicking the P&L, the profit and loss, otherwise known as the income statement, doing the same. Go into that middle tab to set this thing up, closing the hamburger so we have some room to work with here. Can't work when half the hamburger bun is on the plate. How you supposed to eat? You got no elbow room. Let's go from 010124 tab, 123125 tab, select the drop down and put it in years, run it to refresh it, years of 24 and 25 side by side. Let's tab to the right once again, get that bun out of the working room so we have more space. 010124 tab, 123125 tab, selecting the drop down to see it in years, running to refresh, noting nothing's currently in 2025 except for that 7398 for some reason, including not having prior presentation transactions. Why? Because we reset the browser, opened in incognito window so no cookies came through, and we recommend you do the same thing as well so we can be as close to on the same page as possible. Let's go to the first tab once again. And in prior presentations, we've been taking a look at the cycles within cycles of the accounting cycles, remembering we can think about the cycles in terms of time, years, quarters, months, weeks, and versus the related forms, the customer forms or cash inflow cycle, sales cycle, the vendor forms, or basically cash outflow cycles, expense cycles, payable cycle, the payroll cycle. And then we also thought about the idea that we need those underlying foundations, setting up the infrastructure of the accounting system. That's got to work as well. And most of those are under the cog button, and we call them the lists. The chart of accounts is the main one, products and services secondary to that. So now what we want to do is look at the end result that we're constructing, which are the financial statement reports, which we just opened, and the related reports to them, which can be overwhelming because QuickBooks lists a whole lot of reports. But we want to keep focused in terms of what's the major focus of the reports and what are we using them for, and then how are all of these other reports helpful? What are they there for? And if we keep that main kind of focus, then it's not too difficult to understand what the reports are doing. So let's get an idea of that. So what's our main goal for the bookkeeping process? We want to construct the major financial statement reports, basically being the balance sheet, the income statement. You can also say the statement of cash flows, but that report is a little bit different because we basically construct it after, in essence, if you were thinking about order of operations, constructing the balance sheet and the income statement. Why are we doing that? Well, in the United States, we need that information at least for income tax preparation. If you're a small business, for a Schedule C, which is basically the income statement. However, you don't just want the income statement because if you don't have the balance sheet, then you're losing the double entry accounting system. So there's many small businesses in the United States which are basically just compiling an income statement for their tax preparation. That's fine, that's great, but I would not have any level of confidence about the accuracy of their income statement, and therefore they're more liable or subject to the whims of an auditor in the event of an IRS audit because they're not using the double entry accounting system, because the double entry accounting system includes the balance sheet. So by using QuickBooks, even for a small business that just needs an income statement, the level of accuracy has gone up greatly, which safeguards us in the event of an audit for the income tax preparation. Now, if you're a bigger business, you might have to include the balance sheet on the reports that you are creating for like a corporate tax return or a partnership type of tax return. Also, you might have external reporting needs, possibly needing the financial statements to give to external investors, for example, and you might need it for the bank in order to get a loan. And of course, we need it for internal purposes for our own decision-making processes. So that's what we're trying to do. We're trying to construct these financial statements, balance sheet, and income statement. So where do all the other reports come into play? Because if I go to this first tab and I go into the reports button over here, closing the hamburger, we see there's a whole lot of other reports. What are all these doing? How does that fit into our overall goal and objective? So note that we can think about all these other reports for the main part as generally being more information about one or multiple line items on the balance sheet or the income statement. So you can kind of think about like the balance sheet or the income statement as like the list, the chart of accounts or the main chapters. And then if you want to drill into more detail about the backstory of any of those particular accounts, you might be able to do so with other reports. What's the main other report we would do that with? Well, we would drill down on the data. So if I drill down on the data for the checking account, as we have been doing, we get to what we might in accounting world, textbook world, call kind of like a general ledger, a GL type of account for this particular account, breaking out the information that constructed it by date. In QuickBooks terminology, we're calling that a transaction report. So that's going to be one of the major reports that we can get to easily within the QuickBooks system, and we think about it as the direct construction of the financial statements. In other words, if we thought about building the financial statements, we think about the journal entries, which are constructed in QuickBooks by the data input forms that create debits and credits that then build, we would call a general ledger account, which would basically be this type of worksheet for all of the accounts, which we would then compile into, in textbook world, a trial balance before then taking that trial balance and creating then the financial statements, which is what we're looking at here. All right, so but then we have a bunch of other kind of reports which are going to have needs above and beyond possibly just the detailed information by date. And the primary examples of that, for example, are accrual type of accounts like accounts receivable, where the detail of accounts receivable by date isn't just what we need. We need it by customer. We need to know who owes us the money, for example. And so that's going to be, and so we're going to have another report that breaks out the same information, but gives it basically by customer. For inventory, we're going to need more information, not just by the date of the transaction, but by subledger of units of inventory for the transaction. For property, plant, and equipment, I don't just need to know the date of the property, plant, and equipment. I need a subledger breaking out all the types of property, plant, and equipment, the book value, the accumulated depreciation, accounts payable. I'm going to need not only the detail on dates, but also who we owe the money to. Now remember, all these other reports giving you more detail will become more and more necessary as your accounting process becomes more complex. In other words, if you have that easy accounting system, you just get paid by Google because you're a YouTuber or something, then which is great because then it's really easy. You don't really need all these other reports. I'm not tracking accounts receivable. I might not even have that much property, plants, and equipment, although I probably at least have a computer or something like that, right? And so I don't have any accounts payable because I'm just going to pay them off as they come due and so on and so forth. I don't have any inventory because I just make stuff and then I get paid for it, right? That's pretty nice and simple. But if we're in a situation where, of course, we have to collect the accounts receivable, that's going to add another detail on report necessities and so on and so forth. So that's how we want to think about it. Financial statements, balance sheet, income statement, those are not just reports. Those are the financial statements. That's why they're in the favorites. And remember, if anybody says that the balance sheet and the income statement are not their favorite reports, their favorite finance, then they're wrong, right? They're like, don't even listen to them. It's like, how can they not be? That's the summary of everything, right? That has to be that's the end result. Those are always going to be part of the favorite, reports. All the other reports are going to be sub-tabs, more detail, telling you more story about that underlying story, right? It's kind of like in the movies where they have the central theme universe and then they tell all these other stories about the central theme universe, like in the Marvel universe or something. And then you get some stories where they don't tie into the central universe at all. They actually break all the rules, or like Star Wars. You're like, what is this thing over here? It doesn't tie in to the whole storyline. It's stupid. It cut it off. You made something that's like a cancerous thing that attached to it. It has nothing to do with it. Like, right? That would be like having a report that has nothing to do with the financial statements. It's useless. It's worse than useless. It's okay. You get the point. All right, let's go to the first tab over here, and let's just go through some of these reports, giving an overview of them, and then we'll touch into them as needed as we go through our practice problems. So within the reports, we have the standard reports. We've got the custom reports, so we can add the custom reports to it. We'll talk more about that in future presentations. We might have another course or section diving into custom reports, but the general idea would be, if we go to the balance sheet, you will recall that we have some customization up top, which we have used by seeing it in terms of years here. Notice that we broke it out from a 1-column report to a 2-column report. So you can create many different reports just by using some of these features to break out the report. So you've got the years, you've got the days that we can break out. We can look at the current period compared to the prior period using these techniques. We'll take a look at more of these techniques shortly, but I do want to point them out now because some of the reports that QuickBooks puts in their main reports area can also be created using these features from the main financial statement reports, balance sheet, and income statement. So anytime you see like a comparative balance sheet or a comparative income statement, usually you can construct those from a basic financial statement, balance sheet, income statement, which is worthwhile learning to do, because if you can do it from the major standard report, then you have a lot more flexibility about the numbers of reports you can make and how they are constructed. Once you make this kind of adjustment, we could save the report and customize the report so that I won't have to do this every time. Now, I do it every time with this particular report because I don't want to, people to get confused about what I memorized or not. But if you were to do this every time with this kind of comparison, you can customize this report and save it so that you can just go straight into your custom reports and pull it up from there rather than recustomizing every time. All right, let's go back to the first tab. We've got the manage reports. Now, the management reports, these are reports that are attempting to give us a little bit more of a professional feel, which are great for, say, bookkeepers that want to give a package, say, at the end of the month, end of the quarter, end of the year to their clients. And instead of just printing the reports and giving them in a PDF file or something like that, you can put them together in a nice little package report that's going to have, a cover letter and some detail and so on. So these are great. They're not highly flexible. So they're like, if you're going to give this information to somebody else, like a client, remember that the package that you give it to somebody is a lot of the value that you're providing, because you want to give them confidence. So if you give it to them and it's kind of sloppy, then it's going to lower their perception of your competence level. So clearly, just the presentation of the reports, in particular when you're dealing with people that aren't in the accounting world, which most people aren't, that's why you're here, then you want to make it look nice. And this is one way that you can kind of level up to make it look nicer. Now, it's still somewhat limited. If you wanted to level it up further and have more customization, you can export it to like Excel, for example, where you have a lot of flexibility, and then compile that with like Word so that you can then compile your custom reports. And then you got a whole range of fonts and different formatting tools that you can use and so on and so forth. But of course, that takes more time. So let's go. We'll talk. I think we have a whole nother course or section possibly on these as well, if you want to touch on that. But we'll also look at it a little bit more when we get into some of our future presentations. For now, let's just go through the major categories of reports, keeping in mind, trying to think about how they tie into the financial statements. So under the favorites, we've got the balance sheet and the income statement. You can see they're clicked off as favorites with this star button. So if you went down here and hit the star on this one, for example, it's going to pull it up into the favorites. Boom. So did it pull it up? There it is. Yeah. But I'll just keep that for now. I'll take that off. We also have the button over here, customize or add to management reports. So this is how we can add them to these management reports. You can also, by clicking on it and right-clicking on it, as we have been doing, open the link in a new tab, open in a new window. So instead of clicking on it here and opening it in the current tab we are in, it's quite useful, as we have seen, to open it in a new tab or a new window so we can move it around. Once again, the balance sheet and the profit and loss are probably going to be in your favorites, or you might have a variant of them, which is a customized balance sheet and income statement, which possibly has a little bit of formatting that you think is better. All right. Business overview. So we've got the audit log. So this is kind of an auditing type of report that's going to give us more, information or detail. So this is the users. I'll close up the hamburger, the month, and the all events. So this could be quite useful, of course, if you have multiple people that are working on a system. If you have multiple people on a system in QuickBooks, sometimes you want to limit the roles that each have, because that's going to be a part of internal controls. And you could then, do some auditing and check out who did what in the reports here. So if they messed something up, you can find it and say, you posted something to the prior period. So there's that one. We've got the balance sheet. So this is, of course, the standard balance sheet. We've got the balance sheet comparison report. Notice that this is one of the reports that we can construct ourselves, basically, off of a standard balance sheet. And you can see it's got this comparison, in essence, what we have done. We'll talk about how to construct these types of reports later. But just note that QuickBooks put these in here so that they're in like the defaults, but that makes it look like there's a lot more reports than there really are. The other option, like what QuickBooks could have done, is just take out all of the reports that you could construct from the basic reports, which would make it a little bit less overwhelming to have the number of reports here, but then you wouldn't have those nice basic reports that are used all the time, that are constructed from the major financials. So they kind of compromised and they put some of these comparative reports in here, but I would recommend that you learn how to make a comparative report so you can customize your own. So you've got the balance sheet detail report, which again is another variant, of course, on the balance sheet report, giving us more detail. So now that's giving us the actual breakout of the activity in each account. Most likely not the report that you're going to use all the time, because most of the time I think people will use the standard balance sheet and then get to that detail by drilling down to the transaction reports, which are like the general ledger. Balance sheet summary, I'll open that one up. Now this one is possibly, I wouldn't think of it as used internally as much, but it might be a great external report that you use. Why? Because now this is more simple. So when you give the reports to somebody else and you're trying not to overwhelm them, you start with something easy. This breaks out all of the accounts by category or account type, which we'll talk about later. And then once you've engaged them, and they ask questions, hopefully, then you might bring in the more detailed reports. And that's the way I would recommend presenting the reports, right? If it looks nice and clean, nice, clean, short summary. And then when they start asking questions, you're like, okay, now let's get into the nitty gritty and get into the standard balance sheet over here so we can break out all of the accounts and dig into it. All right. And then we've got the statement of cash flows. Now, the statement of cash flows is technically one of the major financial statement reports: balance sheet, income statement, statement of cash flows. You also might have an equity report. But the statement of cash flows, if you were to construct them, and we have a whole courses of accounting on constructing a statement of cash flows. It's a great exercise. If you can make a statement of cash flows using indirect method and a direct method, then that's a good test that you actually understand double entry accounting. But the process happens after you create the balance sheet and the income statement. Why? Because normally we make the balance sheet and the income statement using accrual accounting, which means that we have deviated from a cash-based system because it's more accurate than a cash-based system for performance purposes, because cash-based systems can be manipulated by just maneuvering when you pay for things and when you receive cash. But we would also like to have a cash flow system because the cash is the lifeblood of the company. So we can kind of get the best of both worlds by then taking what we have created and constructing a cash flow statement, backing out, in essence, the accrual components. So we might talk more about that in future presentations, but that's going to be that one. We've got the business snapshot, which will give you some general information. We've got the profit and loss, which is, of course, the income statement. We've got the profit and loss by customer. So this is another report that you can basically create yourself, and you'll note that on this drop down, we have the totals. We've been changing it to years. You can also change it by customer, and that'll give you these columns that will break this information out by customer. So that could be a useful report. It's a little bit more unusual. You might use it in like a job cost system, for example. Profit and loss by month, similar kind of thing. We've been looking at it by year. You can create that yourself. Profit and loss by tag groups. Tags are special things that you can use to then recreate reports, basically income statement, performance, profit and loss, P&L reports, breaking out the columns, just like we saw with the years and by customer, but now by tag. For example, if you tagged all the sales rep items, that could be useful. Similarly to other tools like class tracking and location tracking, which we have whole nother course and sections on. Profit and loss comparison, another comparative report that you can make yourself based on the profit and loss, which we'll talk about how to do later. Profit and loss detail. So this is going to give us some similar to the balance sheet detail, but I don't think you use that as much because most people just go to the profit and loss and drill down to the transaction detail. Profit and loss percent of income. This would be like a vertical analysis type of report, very common type of calculation, but also something that we can create from a standard profit and loss, and we'll talk about how to do that later. You get these percents on the right-hand side, and so then we've got the profit and loss year-to-date comparison, comparing to the prior period of the same time frame, which again you can construct yourself. Quarterly report and profit and loss summary. Again, you can basically create that from a normal profit and loss. Who owes you money? All right, what would this category be giving you more information about? Who owes you? Balance sheet, typically accounts receivable. So if you have accounts receivable, that means you're doing the work first, you're invoicing the client, therefore you have to track accounts receivable. Where do you normally go to track accounts receivable? You normally go, let's go right click and duplicate the tab. You normally go into the sales, which is basically your customer center. And here's all your customers. So you could track the AR over here and you can track the invoices. But we also have reports based on that information, which is the classical double entry system. We might call them subledger reports in a textbook. So accounts receivable aging summary, if I open that, this is the one that's going to be used most often typically. And you can see here that it's breaking out the accounts receivable by how old they are. Why is this the one used most often? Because this one is one that we might use to calculate or estimate how much of the accounts receivable we're not going to be able to collect. In other words, the longer someone has not paid us, the overdue invoice is, the more likely that person is a deadbeat and they're not going to pay us in the future. And so that means that we might make an estimate assuming that that's not going to be paid, and we could use an allowance method for accounts receivable to report the proper accounts receivable. Notice you can find this information again internally, like in here, to look at and sort the past due data to try to collect on it. So that's why a standard subledger we don't use as much in practice because we kind of do it in here, but we still need that aging report. We got the accounts receivable aging detail, similar report, collections report. So if we open up that one, obviously we're trying to collect on the accounts receivable. So this is giving us all of our customers and the outstanding invoices for those customers. Let's close that one out. Subledger type of report, customer balance summary and customer balance detail. Let's go to the detail one. This is the standard subledger type of report, which is going to give us, closing the hamburger, all of our customers that have outstanding balances, the invoices that are outstanding, and the total, if I have my dates right, the total should tie out to what's on the balance sheet. 528152. Balance sheet is 528152. Note that QuickBooks will force us to have these two things in balance by making us record a customer every time we post something to accounts receivable. So that's great. So there's that one. But we don't use this one as much because we can get this information usually internally right here. That's why we don't go there possibly as much as you would think. Invoice list. So the invoices are the items that increase the accounts receivable. Invoice and receipt payments. So this is going to give us more detail possibly about not only just the outstanding invoices, but the invoices and payment receipts, which is the decrease to accounts receivable. Open invoices, which again are the ones that should be creating the current balance in accounts receivable because they have not yet been paid. A statement list. So we have a list of the statements. Remember that the statements are the things that we're sending out to clients. So there's none in here. But if an invoice is outstanding, then we could resend the invoice to remind the client. But what if they have two invoices that are outstanding? That's when we might make the statements, which kind of combine the invoices together. We've got the terms list. This is going to be the terms in terms of net 30 and so on and so forth that we put on the invoices. We possibly don't use this list as much. These are just the items that would be in the invoice when we construct the invoice typically. Unbilled charges. So these would be things like we enter time into the system that's billable time, meaning invoiceable time, or we enter expenses that we make billable, that meaning we're going to pull those into the invoice, constructing our invoice based on those. And this gives us a list of those items that we've said, hey, look, we need to create an invoice based on this expense that we entered in essence. And so we have to pull those into an invoice so that we can invoice the client for them. So unbilled time, so those are the charges. Unbilled charges would be like the billable expenses. Unbilled time would be like we had billable time. If you're in like a CPA firm or a law firm, people do work, and then we haven't yet made an invoice for the billable time. Sales and customers. So what would this section give us detail about? Usually the income statement of revenue, right? So we have the revenue line item. So remember, the general idea on the revenue on the income statement is we want to have a summary of revenue, not breaking out the revenue. There's almost too many revenue accounts in this particular client, right? Although that might be more common in some businesses like for here at construction business. But typically we want summaries of the revenue accounts on the profit and loss, not trying to break out the revenue accounts by, say, customer, because I don't want to have a bunch of revenue accounts by who gave us the money, by who we made sales to. Why? Because it would be a long income statement. That would be ugly, number one. And number two, because I should be able to make a subledger report by customer if I used the proper form and populated the customers, proper forms being invoices and sales receipts rather than deposit forms. That doesn't, right? I also don't want to have too many income accounts by item, things that we sell. I'm not going to have a separate income account by everything that we sell, service item or inventory item, because again, that would be too long, too tedious, number one. And number two, hopefully I can create a subledger breaking out the information by item. Now, there are exceptions to that because, again, if you're a gig worker and you're just constructing your financial statements based on who paid you, like Google paid me or this platform paid me, Then I'm just going to make it with a deposit form, and I might make my income account just called Google AdSense revenue, which is basically the customer that paid us, right? But again, if you're doing a full service accounting system, then you don't generally want to do that. That's the idea. So then over here, we've got sales by customer type details. So we could break out the sales by the type of customer, estimate of progress invoicing summary by customer. Now, progress invoicing is something that is usually kind of in a specialty kind of area where you might have like longer term job systems where they're paying you, on partial invoices. So I won't get into that in detail. Customer contact list. Now this would just be a list of our customers giving us the information like their telephone number and so on and so forth, which typically we can also find internally over here in the sales tab for customers. We can find any particular customer and go into their information to find their phone number and whatnot. But if we want to give a report on that, we can make a customer list. We've got income by customer summary. All right, so here's where we get into it. We've got the income account by customer. So let's look at that. So now I'm going to close this out. Let's make this for 2024. Let's say 01, 01, 24, 12, 31, 24. Run it. So now we've got the income by customer, list of customers, the total income, and then it's got the expenses that are applied to a particular customer, which might be like cost of goods sold, but that's $10,280. And if I look at the income statement, we have in here $10,200. Notice it's a little bit different. Why? Because it's possible to record something to an income account without assigning a customer, which means your subledger is going to be off in that case, as would be the case if we had the gig work scenario recording things with deposit forms that don't have a customer field. But we have that detail. Sale by customer summary. What is it? This is income. Sale by customer summary. Similar report here. Let's just take a look at that. We're going to go from 01, 01, 24, 12, 31, 24, let's say. Run it. So now this doesn't give us the expenses. It's just the sales side, which again is $10,280. So these two reports are a little bit different because this has the expense component. If you had some expenses that are applied to a particular customer, like for example, possibly cost of goods sold. Sale by customer detail, similar to here, but having detail. Deposit detail. Now you would think this might not be on the income side of things, but deposits you would think ultimately come from the sales cycle typically. So you would think it kind of fits in the sales area in that sense. Estimates by customer. Remember that estimates are only there in certain types of industries where they don't actually record anything, no adjustment to the financial statements for them, but we still track them because we might want to convert the estimate to an actual invoice if they're accepted. So inventory valuation detail, remembering that inventory might be something we wouldn't expect here. It's kind of a balance sheet item, but inventory is in the sales cycle when we sell inventory. So they kind of put it in here. And oftentimes when I find the inventory reports, I just type them in here. But you can kind of see this as giving you detail on the inventory, which would be the cost of goods sold on the income statement, and on the balance sheet side of things, which would be the inventory account here, because inventory goes up when we buy it and down when we sell it. So then we've got the product and service list. These are the things that we actually sell. Normally, you would find this going inside to the sales tab, products and services. But if we want a list that we can then give and provide to somebody, we can generate a report with it. Sales by product service summary. Let's open this one up. So this is the other major subledger report we would want on sales. I want to break out the sales by who we sold it to and what we sold. So 01, 01, 24, 12, 31, 24. This is breaking it out by what we sold, right? So this is all the things that we sold and the service items that we sold. Comes out to 10,280, which should tie out to what's on the income statement. On income right here, 10,200, not exact. Why? because it's possible to record something to an income account without adding an item, as would be the case in a gig work scenario where we have deposit forms that don't have items within them. All right, so then we have the sale by product details, similar payment method list. So we have the lists of payment methods. How are they, how are they going to pay us, which we would put on the form. Physical inventory worksheet. So this would, you would think, be backing up or supporting the balance sheet account of inventory, but inventory is part of the sales cycle. That's why it kind of fits in the sale and customer area here. And that can help you to count the inventory to tie it out to the physical amount that's in QuickBooks. Time activities by customer detail. So we have the time activities, transaction list by customer. So we can have a transaction list, the list of transactions, which are the activity broken out by customer. Transaction list by tags, remembering that tags is that special thing that we could add to give us another sorting tool, as we can see here in our reports. Next category, what you owe. What are the major reports for what you owe? You would think that would be on, let's close this one out, the balance sheet for the liability, accounts payable. Now note, you'd only have accounts payable if, as bills are due, you're not paying them off with an electronic transfer or possibly even a credit card, but rather putting them in the books as a bill, increasing the accounts payable to be paid and sorted and then paid at a later date. If that's the case, then we're going to be using this area. Many small businesses don't use this area because they basically pay the bills as they become due. Larger companies are going to use this area more because they have larger bills and more of them typically, which means that paying them a little later has a significant impact on cash flow as well as value of money, inflation impacts, and savings. So accounts payable aging summary, this is the standard report similar to the accounts receivable aging, basically breaking out the amounts that are due into post how overdue they are. Now, most of this information, again, will be done internally. So we're going to go into the expenses or vendor tab and into our vendors or into our bills, sorting the bills. So even if we have accounts payable, you're probably going to go here more than the reports, but we might provide the reports for external reporting purposes or for internal reporting purposes as we discuss it. Account payable aging details, similar. Bills and applied payments. So that's going to give us more detail because the bills increase accounts payable. The payments, applied payments, are the payments we made, which are the decreases. Bill payment list, we've got the 1099s. Now the 1099s are specific to the United States for income taxes. And if we have an employee, we're required to do withholdings. If we don't have an employee, the IRS still wants us to say, hey, I would like you to rat out who you gave the money to because I need to go after them to get the income. Now, who do we have to rat out? Well, the IRS isn't concerned with big businesses typically. So they're not really concerned with corporations. Why? Because they already have their hooks on the corporations. Edison is not going to try to evade taxes. What are they going to do? They're going to try to collude with the government, right? They're not trying to get out of taxes. They're trying to level up the amount of laws and regulations in order to decrease competition through collusion with the government, right? So the government's not worried about them not paying their taxes so much. They're worried about the little guy, the contractors that might fly under the radar. So if they're not incorporated and you pay them more than a certain pretty low dollar amount, that's who the IRS wants the 1099 for typically, so they make sure they can get that little guy. All right, and then we got the 1099 contractor balance summary. You've got the unpaid bills. So these are obviously the things that should construct the accounts payable because you have entered the bills but not yet paid them. You've got the vendor balance summary. This is the classic subledger report, which is going to break out who we owe money to by vendor, which again, you would normally track internally in the customer center. Vendor balance details similar. All right, let's look at the expense and vendors. What would these reports give us more detail about on the financials? Typically the income statement. for the expenses. So we looked at the income side. Now we're on the expense side of things. We have a similar kind of scenario on the expenses. We categorize expenses by what we paid for. In other words, I don't put the vendor typically on my expense form on the income statement. If I paid a contractor, I say I paid contractor expense. I don't say I paid Jane Smith and Joe Doe or whatever on here. If I want to get that more information, I can run reports possibly that'll give us more information on who we paid. When I pay the telephone bill, I don't say I paid Verizon expense on the income statement. I say I paid the telephone bill. Now, if I had multiple telephone bills I had to pay, Verizon, Apple, I don't know, the AT&T, then I would have to track them by vendor. And remember that you don't always have to add the vendor in order to post something to accounts payable, even if you use the bank feeds, and many people forget that they should add the vendor to give them that added level of reporting so that they can generate other reports over here tracking information by vendor if they so choose. So we have the check detail report. So these are money going out. So you would think that that's a balance sheet account, but money going out is typically for the purchase of goods and services, expenses ultimately, and therefore you would think it would fit in here. Now remember, anything dealing with a checking account, you might construct yourself in essence by going to the balance sheet, going into the checking account, and then you can sort the checking account or filter it. Let's go to switch to the modern mode up top, and then I can filter the checking account. And I can filter it by transaction type, possibly, helping me to find the increases and decreases to the checking account. But you might be able to get a summary report over here for that as well. 1099 transaction detail. Again, you got those 1099 reports that you got to deal with if you're in the United States. Purchase by product service detail. So now we can break out the purchases by the products and services, remembering that's normally dealing with inventory, because the products that we're going to put in play are inventory items. If you're not buying inventory, then you might not need this report might not be as useful. Open purchase order detail. A purchase order is a request for inventory. And note that many businesses don't have purchase orders because one, either they don't have inventory, or two, they have to pay for the inventory when they request it, similar to when we buy something from Amazon, and therefore they don't have a purchase order. It's only when you can request the inventory without paying for it, they ship it to you without you paying for it, and then you pay for it, in which case you'd have to track the purchase order, and that would be this information. Purchase order list. We've got the transaction list by vendor. So now we can take a look at the transactions broken out by who we paid. So on the income statement, we have the expenses for what we paid for by category. This now are the expenses by who we paid, right? So I'm going to close this back out. And then you would only be able to have this report, by the way, even if using bank feeds, you made sure to take the information from electronic transfers in the memo section to create the vendors, which some people don't do. And they might as well do it because you have the information most of the time. And that'll give you more detail so that you can run a report like this. So purchase by vendor detail, similar vendor contact list. This will give us all the contacts for the vendor. Many vendors, we might not have any contact information because we just put the name of Verizon, of the utility company, and so on and so forth. But particular vendors, such as those we buy inventory from, we probably want more information and contact detail about so we can communicate with them more closely. Expenses by vendor summary, similar report here. How about sales tax? Now, in the United States, the sales tax is a type of consumption tax, similar to what you might have in other countries. Remember, in the United States, the major federal tax is a federal income tax, and then you've got the state taxes, which could include sales tax, depending on the state, because the state can do whatever they want to do that they think is best, even though some people on the feds don't agree with that. They try to, but no, they can do whatever you want, do whatever I want. If you don't like it, get off my back. And then anyways, I got a little distracted there. But usually we would find the sales information on this side under taxes, tracking the information here. So they've kind of changed the sales tax widget a little bit. So these reports might not be as relevant now because you might find them basically over here. We'll talk more about basically the general process of sales tax later, from setting it up to tracking the reports and when you would pay for it and so on and so forth. But that's basically done with this kind of widget on this side. It's not as complex as payroll. So we'll talk more about that later. And then you've got the employees, which is basically payroll reports. Remember, anytime we think about payroll, you could think about, are we doing the payroll within QuickBooks, or am I doing payroll outside of QuickBooks, or even do I have payroll because possibly I want to grow without picking up employees? Maybe I want to just pay contractors if that's possible, pick up a partner, although be very careful with that, for example, as other options. If you have payroll, then you're going to have to pay more for it, typically, to track it, especially in the United States because of the complexity of the laws around it, human resource laws as well as tax laws, which are going to differ from location to location, which is why having that more information is quite important. And so if you do payroll within QuickBooks, there's going to be a whole lot of other detail that are going to be in the system. And you have all these other reports that you can use. And the reason we need those other reports is because those are the things that are tracking all of the detail we have to have on hand in order to deal with our reporting requirements, which include reporting requirements to each of our employees on a payment by payment method, meaning here's your gross pay, here's what we took out, Social Security, Medicare, and federal income taxes at the least. Here's your net pay. I have to tell them that in a pay stub, which I might not physically give them, but need it electronically possibly at this point in time, not only for the current pay period or the current pay, but also on a year-to-date basis. And I'm also going to need the summary information in order to create the quarterly 941 reports and the yearly 940 reports, as well as to distribute the W-2 forms, which is going to give similar information on a yearly basis, and the summary of the W-2 forms, which is a W-3 form, at the end of the year. So that's going to add a whole lot of added reports that basically back up all of that kind of reporting information that we need to construct. We have a whole nother course or section on payroll. Payroll is its own. It deserves its own world. Anybody that says they're going to teach you payroll in 4-hour course along with all other QuickBooks items, run from that course. They're liars. That's a lie. It's a dang lie, and you know it. Anyways, for more accounting information, you've got the account list. So this is for my accountant. So oftentimes when they're down here, we're going to have some stuff that's duplicated. So I don't know why they do that. They put it in kind of in both places. And anytime you have something dealing with debits and credits, QuickBooks typically puts it down here. They're thinking of the accounting department and bookkeeper of working with reports, forms on an accounting equation basis, assets equal liabilities plus equity, as opposed to a debit and credit basis. That's why they put these here. So we have lists. I'll go through these quickly. We're running along here. We got the recent automatic transactions. So if you have automatic transactions, meaning they're happening automatically, you've timed them, they'll be here. The balance sheet, this is repeated, of course. A comparative balance sheet, this is repeated. Statement of cash flows, we already saw that one. General ledger. Now this report, the GL, is the standard report that we kind of think of as the transaction detail, breaking out all the information. Let's bring this to the prior year, 01/01/24, 12/31/25. Breaks out all the information, giving us the detail in the report. And so it's like a transaction detail report. And notice you would think it would give us the debits and credits, but it's still kind of reporting it in a plus and minus format. So this, in essence, like here's the checking account, here's the savings, it's the balance sheet on top of the income statement, giving us the detail of the report, which most people are probably these days going to go into the balance sheet and just drill down on each line item, getting the transaction report, right? Which is basically kind of like a general ledger. It used to be when you did taxes or auditing, sometimes you had to give them this giant report because you couldn't give them access to the accounting software so that they can drill down on the detail. But these days, you can give them access to the accounting software, which means they possibly are not going to go to the GL as often, but rather drill down on the financial statements or trial balance report. Closing this back out, first tab, the journal report. We took a look about this briefly before when we looked at the journal form. This is going to give us all of the transactions in journal entry form. Let's do it for last year or something. Last year, what did I do? I'm getting tired. Why can't I find, there it is, last fiscal year. So now it's given us all of the forms. So notice it's not just giving us the journal form. In other words, you might think this report would just give us the transactions we entered with a journal, but no, it's giving us all the transactions because all transactions are all forms except for a few of them like an estimate and a purchase order, which don't affect the income statement. All other forms have a journal entry related to them, and therefore you can see them in terms of journal entries. So this is a great report to be able to look at the forms and think about debits and credits, which will help you to think about what debits and credits are doing in that format. It gives us more detail on things on like invoices, for example. It gives us the detail of the transaction, which is useful because an invoice, for example, doesn't give us all the information about like the inventory side of the transaction and so on and so forth. You also might use a report like this to try to do your billing process. How? Because if you're billing as an accountant, you might say, I'm going to charge you by hour, but you might also say, look, what I'm going to do is I'm going to count all of the number of transactions that I have done. And if you're in these ranges of transactions, that's what I'm going to base my rate on. Now, you might go more detailed than that and say, hey, look, because the problem with that by transaction is that some transactions like this invoice is a lot more detailed than a transaction that you build on like a gig worker where you just enter a deposit. So you might say this transaction should be worth more. So maybe you make your billing based on the number of accounts impacted in a month. And you can count up the number of counts. How would you do that? Well, am I going to run this report every month and count the transactions? Well, all the line items, you could. But you can also export it to Excel and sort it so that and then you can use Excel to count it. And that way you can make your billing system not just based on somewhat arbitrary hours, which can change based on your mood and who's doing the work, but based on more concrete transactions, which you can then provide evidence for. So I think that's useful. So recurring template list, a list of templates that you can have. Profit and loss, we've already seen it. Profit and loss comparison, recent transactions. So that'll give you, if you're reviewing someone's work and stuff like that, that's what you've entered recently. Reconciliation reports. Now this is like a bank reconciliation is the most common reconciliation. And generally you're going to go into the banking information and find this information there. That's not, it's not exactly a report. It's more like an internal control for the bank account. It's really important, but you're not really constructing the reconciliation report as you do the data input as with other reports, but instead you are comparing what we did to what the bank has done, and that comparison is the reconciliation. So it's kind of a different thing. We'll talk more about that in a future course or section. Trial balance. This is a really underappreciated report in the bookkeeping world. In textbook world, it's really important. So it goes from 01, 01, 24, 12, 31, 25. This basically has the balance sheet on top of the income statement in one report. So for me, I often use this report to have open instead of both the balance sheet and the income statement. Look how long this is because of the subledgers, how long this report is, and then this report, right? If I just want to look at something nice and quick and see the transactions as I record them. I record the transactions in the first tab. I want to see the impact on the financial statement. I often prefer a trial balance report because look how tight it is. I've got the whole balance sheet, assets down here, to right here. This is, and then to assets, then liabilities start here, boom, boom, liability, 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 and then the equity section, and then the income statement. That's the whole, and I can make this for 2024. Let's go to 12/31/24. And so there we go. So now we have all of 2024. So it's still a little bit longer, right? It's not that short because the income statement is still pretty long, but it's a lot more tight and consistent a form. So the general idea would be, from an accounting standpoint, debits and credits are a more efficient way to look at things typically than the double entry accounting system. And therefore the trial balance is a cleaner, more efficient way to kind of organize all of the accounts and see that the double entry accounting system is in balance with the balance of the two columns. But you have to learn debits and credits in order to read it that way. And therefore, for external reportings, typically we think of taking the trial balance and constructing the financial statements. So note, from a bookkeeping standpoint, what we normally do is do data input, look at the end result of the financial statements, drill down to the source document to see how they were built, to the transaction report, which is like a general ledger, and then into the detail. From a textbook problem, going from the bottom up to the construction, we normally think of it as how is this thing being built? You normally enter the forms, which are basically journal entries. The journal entries are used to construct the general ledger, as we saw the general ledger report. And then the general ledger is used to construct a trial balance. And then the trial balance is used to construct the major financial statements, balance sheet and income statement. And then the balance sheet and income statement could be used to construct the statement of cash flows. That's kind of like, and so this is like the step before if you did it in order, building from bottom up, the step before. So it's a little bit cleaner. Okay. So you might, even if you don't know debits and credits, you might use this report as like your nice quick 1-tab instead of 2-tab report to see the impact of transactions. All right, let's go to the first tab, and that's the trial balance. Where was I? Profit tag, trial balance. So transaction detail by account. That gives you the detail by account. The transaction list by date is the one I want to look at here, because this is a great tool to kind of review recent types of transactions. So let's do a custom date. Let's just make it from 01/01/24, 12/31/24. So this is going to give us all of the transactions, but instead of breaking them out by account like the general ledger does, it gives us all transactions in order by date, gives us the type of transaction and the name. Now notice it doesn't give us the detail because it's trying to put them in one line item, but it does give you the split account. So if there's only one other account affected, like you made a deposit and you recorded the other side to revenue, then it'll show the other account here. So it'll be a deposit form, increase in the checking account, and the other side will go to revenue. But if there's multiple accounts affected, like with an invoice selling inventory and having sales tax, the other account is going to be split. So one way you might use this report is, again, on your billing cycle. You might say, hey, look, what I'm going to do is I'm going to charge people not hourly, but by transaction, the number of transactions. Now, this isn't as detailed because, like I say, some transactions like payroll are more complex than others, which you might want to bill more for, which you would have to count the number of accounts impacted, such as being done with the journal report. But if you just want to do it more simple, you can do it by transactions, even though some are more complex than others, and say, I'm just going to bill by how many transactions. This is my rate in this range of transactions. And that's a little bit easier to count because I can just export this to Excel, and then I can just count the number of columns in Excel using an count function, which will be easy to verify, and again, easy to then explain to a customer. How are you billing me? Well, these are the transactions I entered. Here it is in Excel. Here's the number of transactions. here's my billing rates for that number of transactions, right? So that's one way you might think about setting that up. It's also great to review what someone else has done and so on in this type of report. All right. And then you've got the transaction list with splits. Now you would think I wish this was by date and then it gave the splits, but it doesn't. It's by account, I believe. So you can't really get the detail like you kind of would like to get. I wish they had the transaction list by date with splits, meaning showing more than one account impacted so I can count the number of accounts. Now this is more payroll information, which again would only be used if you are having payroll and you use the payroll within QuickBooks. All right, that's the general summary.